Hello guys, a very good morning to everyone. Today we are going to start with the corporate topics. Let me share my screen. Good morning everyone. Okay. So before starting with our practical training, I just want to give you a heads up on how we are going to proceed in the upcoming days. First thing is today and tomorrow we will understand the whole overview of the corporate uh, taxation of US, right? In corporate taxation we have so many forms, so we'll understand each and every form in detail, right? Before just directly jumping into the tax preparation, first you will have to understand what each and every line items means in the form. Okay, so we'll understand that overview. We'll understand the type of business entities which we have. Second thing, I think this was not mentioned earlier, but after completion of this training, you people are going to get a certificate of participation. Okay, so those who are freshers and they if they are going to apply for job maybe afterwards after taking the training, they can use that as a reference in your resume. Okay, third thing is for any doubts or queries and questions, we will have it at the end, but I hope you guys will not have any queries in the middle of session, because that will create a lot of disturbance for everyone else and also for me. So just note down each and every queries. Maybe before starting the next day session, the first 5 to 10 minutes will take the small doubts. Okay, and if there are so many queries, question, you can anytime ping us on WhatsApp, or maybe at the last day, last session is our only doubt solving session. Okay, so we'll have a quick overview on the last day also and the doubt solving also. Okay, so just a minute, let me see if there is anyone in the waiting room. Yeah. Okay, regarding material, whatever we are going to understand in the class, the whole this class notes will be provided to you on daily wise. On day wise, each day we have a separate explanation topics. So topic wise, after the completion of session till evening, maybe you will receive a this notes on your email. Okay, so let's start with the first topic, that is what are the common types of business entities that we are going to understand in the corporate taxation. The common first one is the sole proprietor. This will be covered in your individual taxation, that is 1040 return. Okay, so types of forms, if you guys are aware, is 1040 is for individual taxation, which for which we have a totally separate understanding, totally separate batch, which will be started after completion of corporate. Okay, then for corporation, we have three main types of forms. You have to understand it's 1120 S Corp, it's 1065, that is your partnership, and the third is 1120. It's just a normal corporation. Today we are going to understand the difference between all of these three entities, right? What are the filing dates? What are the criterias? All those things we'll understand. So remember one thing, partnership means simply, it's the same definition which we use in Indian taxation. Two or more people, if they join together and start a business, that is a partnership. Okay. Now, here in partnership, we have one more bifurcation. Just a minute. Yeah. So see, understand this. 1065 is your partnership. Okay, in partnership we have two types of partnership. In India we have limited and unlimited, all those different types, right? There is two different partnership, that is general partnership and second is limited partnership. Okay. So simply understand this general partnership means nothing but where all the partners are called as general partners. Now, what do you mean by general partners? Where the liability of those partners are unlimited. So can I say general partnership is simply your unlimited liability partnership? Okay, unlimited liability means what? Even if you have to repay something, right, at the time of dissolution or anything, this each and every partner who are general partners will be personally liable. Okay, limited partnership is simply simple definition is all the partners will be there, but out of that, at least one should be general partner. Okay, and rest all will have a limited liability, but at least one should have a unlimited liability. Okay, so this is what called as partnership, and the type of partnership we have is general partnership and limited partnership. Okay, same way along with this I'll explain you small concept of 1120S corporation, and then I'll take forward because these two forms you can compare together. This will have some similar identity, similar criterias, which we'll see later on. First, let's understand what is 1120S corporation. So see, as the meaning says, S corporation, it's a corporation which will have a small business. It's also called as a corporation for a small business entities. Just a minute, guys. Okay, so let's continue. So many people have joined a little bit late. Let me recap few things. Today we are going to just understand the common types of business entities which are going to be used in US taxation. Okay, the first one was sole proprietor. As we everyone know, sole proprietor is simply a single owner of a business. It's an unincorporated entity. Okay, and it will be covered in your 1040 return. In 1040 return, we have one schedule that is called as Schedule C, which is mainly used for business income and expenses. Okay, so if you are a sole proprietor, means you are an individual person who is running a business, and in that case, you will be using a 1040 form, Schedule C. Okay. Further, we understood that what are the other types of corporations, that is a partnership firm, 1120 S corp. This two you will understand together. First, in case of partnership in US, we have general partnership and a limited partnership. Okay, general partnership, you can just compare it as a unlimited partnership, where all the partners in the general partnership are general partners. Okay, what do you mean by general partners? Means all of their liability is unlimited and they will be personally liable. All right. Same way for limited partnership, all the partners' liability will be limited. But as per the law, at least one partner, in case of limited partnership also, at least one partner has to be a general partner to begin with. Okay, rest all can be unlimited. Sorry, can be having a limited liability. That's fine. Okay. Second thing is regarding 1120 S corporation. Whenever there is a corporation incorporated and having a small business, that can go for 1120 S corp or S corporation. filing. Okay. Here the criteria are there has to be at least less than 100 members. Once your members, see in India we have shareholders, right? Over there for 1120 S corporation, we call them as a members. Those who are forming this business are together in this business, they will be called as a members in case of S corporation. Okay. So in case of S corporation, there has to be less than 100 members. What if the number of members exceeds 100? The S election, this is called as S election, will get terminated. Okay. Just a minute, guys. See, everyone will have to join the session on time. We cannot, at the middle of the session, we can't go and admit each and every students in the class. So it is requested to at least join till 8:05 a.m. Okay. So in case of S corporation, there is a S election. Once you are, not fulfilling few criteria, your S election will get terminated. What are those criteria? First one is there has to be less than 100 members. Second is all the members has to be resident. Resident means US resident. Okay. They cannot be non-resident members which can be admitted in the S corporation as a member. As soon as any of the member from this 100 members becomes a non-resident, right, the S election will get terminated and they will have to select other option, that is 1120 C corporation, or they can go for a 1065 partnership. Now you will have one question in mind. Are there any limit in number of partners in case of partnership? Just like in India, we have a certain limits that this much number of partners can be admitted in a firm. There is no limit in case of partnership. There is no limit in case of C corporation. C corporation, we will have again members. Okay. There's no limit in number of members, number of partners. Only the limit in number of members is for 1120 S corporation. Got it, guys? Okay, simple. This is just a basic overview of different types of entities. We will understand the criteria, how the income and expense will be taxable, whether it is taxable to the firm or to the individual partner. It is called as pass-through status. Okay, let's understand that first. What are the two entities which are called as pass-through entity? What do you mean by pass-through entity? Whatever is the income and expenses, okay, after that you'll receive net income. This will get passed through to either the members or the partners. Okay, and only 1120 S corporation and 1065, this two entity will be called as pass-through entity. Means tax will not be paid by the organization. They will just report their income and expense to the IRS. That's why 1120 S corporation and 1065 form is just an informational return. They are just providing information to the IRS that look, IRS, this is our income, these are our expenses, and this is our net income. This net income will go to each and every member's partners in their respective shares. Okay, and when they receive this income, right, this net income will form part of your Schedule K. So Schedule K will show 100% of your total net income. Out of that, for each members, each partners, we are going to issue Schedule K1, K1, K1 for each and every share. Let's say partner M, P, and Q is there. Each partner is having a 30% share. Okay, so out of this 100% of net income, 30% will be shown on their individual K1s. Okay, this thing you have to understand, guys. In corporate returns, people face problem in two things. First, see, entering the income and expense in the software is very simple. That's not an issue. The issue is when you have to decide which income will go to Schedule K and which income will go to page 1 of your tax return. You'll have to apply your mind over there. Second problem which people face is regarding reconciliation of M1 and M2 and matching the Schedule L. Schedule L is your balance sheet. We'll understand that. So just remember one thing, that in case of pass-through entities, each and every income and expenses will be recorded on your page 1, which are related only and only to your business. Okay. Now, other incomes like interest, dividend, right, rental income, all the passive incomes, I can say, passive incomes, remember this word. Passive income is your unearned income. Unearned income means where the main activity of your business is not investing activity, but still you're earning some interest income, dividend incomes, right? Renting is not your main business, but still you're earning the renting income. All this passive kind of income will directly go to your Schedule K. Okay, let me make you understand this by showing the form 1120S. I'll just take that as an example first. See what will happen. This is your 1120S corporation form. Here you can see on the page 1, we have incomes, we have deductions. Okay, so all these incomes and deductions which are listed over here are directly related to business. Okay, directly related to business. Now, this line 21, if you guys can see, is your ordinary business income or loss. Means taking all the income, see gross receipts, reducing any return and allowances. Then we have cost of goods sold. Then we have gross profit, right? Then we have net gain from 4797. This means if there is a sales of business property, okay, so that is related to your business income, right? So that will be included over here. And any other income, if any, those which are directly related to the business. So all the incomes we are going to consider over here, all the business related expenses, right? If you're providing compensation to the officers, what do you mean by officers? Let's say there are 100 members, but out of those 100 members, 3 are the main officers, main directors, I can say main person who are handling the day-to-day managements. Okay, so they might be receiving compensation on monthly basis. In US, what happened? You receive a payroll, maybe on weekly basis, bi-weekly basis, or the third option is monthly basis. Okay, so what will happen? Whatever compensation the officers are going to receive, that is to be separated from other salaries and wages which you're paying to the normal employees. Okay, so whenever you're paying compensation to officers, you will have to file 1125E form. In case of COGS, we have 1125A form. We'll understand these two forms also when we prepare the work papers and start entering the data in the software. But just understand right now the concept overall, understanding of this tax form is simply taking all incomes, reducing all expense relating to the business. You will receive a ordinary income or maybe loss. Okay. Just a minute, guys. Income or maybe loss. Now, what will happen? This is your 100%, right? There may be a lot of shareholders in the in this S corporation. But remember one thing: in case of S corporation, in practical life, you will see the returns which will have almost only one shareholder or maybe two shareholders, or maybe maximum 5 to 6 shareholders. You will not see any return with 50 to 60 shareholders. They don't want to calculate, a lot of calculation. They don't want to issue a lot of K1s. So what they will do, they will just shift from S corporation to normal C corporation. Okay, but just remember this thing. This is your 100% income, which will be carried to the third page. Okay, third page, Schedule K. Okay, first line, if you guys can see over here. Okay, ordinary business income or loss from page 1, line 21. So here the whole 100% net income will be considered. Got it, guys? After that, just check the line number 2 to 7. All these are your passive incomes. If you have rented any property, so rental income, then there is a, this three are related to renting. Then there is this interest income, then we have dividend income, then we have royalties, then we have capital gain from sales of securities. Okay, there are two types of capital gain, from sales of shares and securities, and the one is from the sales of business property. If it is a sales of business property, then that will be added on your first page. Okay, here if you can see net gain, the fourth line. But if it's a sales of shares and securities, it's your passive income. So it will go to the Schedule K. Same way, there are some expenses, there are some deduction which will go to Schedule K only. That will not be added on your first page. Okay, you guys will have to remember this thing, that what items will go to first page and what items will go to Schedule K. Because when we prepare the work papers, there we have to do the tax grouping. What do you mean by tax grouping? Means, let's say there is a profit and loss which will be provided by the bookkeeper, accountant, and the categorization will be done by them only. But you have to mention that the total amount will go to which head, like repairs and maintenance, or maybe bad debt, or rent, taxes and license. This is called your tax grouping your each and every small items into one head, right? So on tax return, whatever is the name mentioned, that you have to enter it on your this work paper. That we'll understand how we'll do it when we start the preparing the work papers. Okay, wherever it goes to Schedule K, you have to mention just that it will be going on a Schedule K, page 3. Okay, no need to mention the page number. This is just for your reference. You can just mention that it will be entered on Schedule K. Because in software, we will see PNL will have a different input screen and Schedule K have a totally different input screen. Okay, so in deductions, these are important to remember, guys. In deduction, there are two deductions which will go to the personal return. See, why I'm saying personal return, Schedule K, whatever is this, total of your Schedule K, this will get transferred to individual K1s, right? So this K1 will be added in their personal return, means 1040 return. So that's why, guys, we started with the corporate return first, that you can get an idea of K1. And then when you start preparing the 1040, you will be totally aware about from where this K1 income is coming. Okay, so Schedule K1 is the 100% income, and sorry, Schedule K is the 100% income, and K1 is the respective share of each and every individual members and partners. Okay, in deductions, we have two deductions which will be separately shown on Schedule K, that is 179 deduction. What does this means? If you guys have the understanding of depreciation, in India we have some special allowances, special allowance depreciation, and some bonus depreciations which we take, right, on when first time we buy the property, tangible personal property, or any XYZ asset which are eligible. Same way, this 179 deduction is 100% deduction. When you buy any asset, that asset has to be a tangible personal property, right? In the first year, you get 100% deduction. But there is a limit. Maximum which you can get, individual person can get, is 10,80,000 of maximum deduction. Means, let's say I have purchased one tangible property of $10,000. Okay, so I can claim this whole $10,000 as a 179 deduction. Okay, in profit and loss, you will see that there will be only depreciation expense recorded. This 179 will not be recorded because bookkeeper doesn't know the laws of taxes, right? And this is a specific law which is used only for tax purpose. Okay, so here the role of the tax preparer comes into picture. Whenever there is a profit and loss given by the bookkeeper, it is called as book profit, right? You have to make some adjustments by passing some AJs and make it as a tax profit. So this adjustments which you're going to make, right, will be passed in the books also on 31st of December to reconcile your book profit with the tax profit. And this is where we come to fifth page, which is called as your M1 reconciliation, reconciling your book profit with your tax profit. Okay, now what are the difference between these two? What is the difference between the book, what can affect the book income and the tax income? That depends on two things. Okay, it can have a permanent effect, permanent difference, or temporary difference. Okay, there are a lot of items which you are going to add, or a lot of items which are going to reduce from your book profit to reach at your tax profit. Just like in Indian taxation, we have MAT and AMT, right? We need to take the book profit, add and less certain items. Depreciation as per book, depreciation as per tax is totally different, right? So we are going to give the effect of depreciation. There are certain incomes and expense which may be taxable and exempt. Okay, we'll understand each and every line item which will fall under permanent and temporary difference. Okay, coming back to Schedule K, 179 deduction, you will just consider it on your Schedule K. Charitable contribution. See why these things are separately mentioned over here. This you will understand in when you file the 1040 return. For this, each and every individual things, there are different limits in the individual returns. Okay, so there is no limit which is applicable in corporate returns. Are you guys understanding? This thing cannot be taken over here as 100%. There are certain limitations that charitable contribution will be allowed only up to certain percentage of your individual income. That's why it has to be bifurcated separately. Okay, so charitable contribution means any donations which the organization has made to any trust, right, or any charitable institution. Those all things will be included over here. Okay, then there is a investment interest expense. Investment income is not their main purpose. Investment activity is not their main activity. Then what will happen? Interest income is your passive income, right? And it will go to Schedule K. Same way, any expense incurred to earn this income, right? Let's say you have taken a particular loan to invest into some opportunities, but that is not your main business. So paying the interest on that loan is your investment expense. Okay, investment interest expense. So just remember, if interest income is going in on the Schedule K, all the expense related to this interest income will also be added as a deduction on Schedule K. Okay, then there are Section 59E2 expenditure and other deductions. Okay, you don't have to right now don't have to remember these two things. We will do it when we start preparing the work papers and everything. So this all incomes and deductions, just remember, which are not directly related to business will go to Schedule K. Everything which is related to business will go to page 1, your profit and loss. Okay, so this is what I was trying to explain about your 1065 and 1120S. Just a minute, guys. Yeah, this this is what we understood about 1065 and 1120S. Same way, we saw just the one form, that is 1120S, but the concept for 1065 is also the same. We'll see that form also in detail. But let me first complete the basic part which we were at. In 1120S, as you all know, there will be PNL, there will be Schedule K, and there will be K1. Okay, this K1 will go to the 1040 form, right, as a income for individuals. Okay, now what will happen? Whenever this form, this 1120S form is filed, what will be the due date of filing this form? Before telling this due date, I want to tell you the due date of 1040. 1040 return due date is 15th of April, means I can say 15th day of 4th month after the tax year, after the end of tax year, I can say. Okay, so 15th April. Now if this 1120S corp wants to issue the schedule K1s to their individual partners, they will at least have to issue a little bit earlier, right? So that this individual people can file it on time. So that's why for partnership and S corp, the due dates for filing is 15th of third month. Means the due date is 15th March if you are following a calendar year. Sorry, 15th of March will be your due date. Got it? Due date is simple, easy to remember. If you remember, the 1040 due date is just 15th April, right? 4th month from the end of the tax year. Now it might happen in case of partnership, in case of S corporation, they might be following fiscal year also. So simply you have to take the third month from the end of the tax year. Let's say, what do you mean by fiscal year? Any year, any tax year which is ending other than December. Okay, if it is ending on December, then it is a calendar year that they are following. But any other month, let's say June to July, July to June is taken as a tax year for a particular entity. Then what will happen? You'll have to calculate 3 months from the end of that particular month. Let's say June 30 is the ending month of that ending month for the tax year. You will calculate 3 months from June, that comes to 9, means 15th of September will be your filing date. Okay, but remember one thing, over there we have 2 tax seasons. Okay, 15th March, 15th April. Just a minute. So over there we have 15th March, 15th April. This are the two tax dates. Apart from that, if you are not able to file on these deadlines, you have the option to extend your 6 months. Okay, so by filing an extension form 7004, you can extend your due dates. Okay, so 6 months from your original date, you can extend the tax filing dates. Okay, so I can say in US we have 2 tax seasons. One will come in the March, April, okay, and the next one will come in the September, October. For those who are having deadlines of 15th March, you are going to extend it by 6 months, so it will be 15th of September. Those who are having a deadline of 15th April, you are going to extend it by 6 months, that will be 15th October. Okay, guys. Got it? This is simple overview of each and every entities, how Schedule K and K1 will be considered in case of 1120S corporation and 1065. Now let's talk about normal corporation, C corporation I'm saying. Okay, normal C corporation will not have any Schedule K, K1, anything. It will not have any pass-through status. Okay, so schedule and K1 will only be there. We don't have any such pass-through status, and that's why when they distribute the income, okay, the distribution which are made by the corporation are called as dividend. Now, what usually you will see that corporation are also have one disadvantage. They have double taxation. When they file the return 1120, okay, 1120C corporation will use only just 1120 form. When they file this form now, they will have to pay taxes at that time. Okay. Along with that, when they distribute the income to their members, to their shareholders, this dividend will be taxable to them on their individual return. So can I say this income is taxed twice, one in the hands of corporation, second in the hands of the individual person at their individual tax rates. Okay, so just remember one thing. In case of sole proprietor, it will go to 1044. In case of partnership, it will go to 1065, and it's just an informational return. All the income will be passed through to the individual partners in their individual returns. C corporation is simply a separate entity. That's why see it have no liability to issue any K1s to their individual members. So that's why the filing deadline is same as that of sole proprietor, that is 15th of April, 15th of fourth month. Okay, but remember one thing, in case of this corporations, there is one exception in case of filing. See, the due date is what? 15th of April. Okay, that is 4 months from the end of the year. Plus, you will get a 6-month extension. What if you are using a fiscal year? Fiscal year ending 30th of June. Right? In this case, instead of 4 months, the due date will be 15th of third month, means 15th of September. And for this type of, only for 30th June I'm talking, guys, because there most of the entities will either use calendar year or they can use fiscal year. If they're using fiscal year, most of them use 30th of June. So if they use 30th of June, in that case, instead of 15th of fourth month, it will be 15th of third month. Okay, plus you are going to get 7-month extension. Instead of 6 months, you will get a 7-month extension, and this will happen only in case of corporation, guys, not for individuals, not for any S corporation or partnership, only for corporations. Got it? If you're using fiscal year that is ending on 30th June, it will be 3 months from the end of the year instead of 4 months. Okay, this is simple. Next thing which we are going to understand is, before moving to next, I just want everyone to write in the chat, have everyone understood the type of entities, or this 3 type? Okay, LLC is yet to be done. Sole proprietor, partnership, corporation, 1120S corporation. Have you guys understood this 3 basic overview of these 3 entities? I just want to answer yes or no in the chat box. Okay. Yeah, I'll make you understand this Kunal single member, multi-member comes into LLC topic, which we are going to start right now. Yeah, okay, good. So this three are normal, which we are going to use. Now let's understand LLC. And guys, this is important. In US taxation, there are two types of return which you are going to file. Okay, one is federal level, means this you can call it as a central, and one is state level, state return. Okay, now how can you identify in which state you need to file the return? That depends on in which state you are having existence of your business. From whatever state you are earning income, in that respective state you will have to file a state return. Let's say you are having existence in 7 states. So in all the 7 states you will have to file the state return, and a single federal level return will be filed. So the federal level return we have already seen, that is 1065, 1120, S corporation 1120, and one will be individual 1040 return. Even for individual, there will be a state return. Now in state return, there are so many states. Each and every state will have a different forms. Just like, for example, 100S is used for California state. Okay, 540S is also there. So all this type of different forms will be used for different states. In corporate taxation, I'll take 2 or maybe 3 states when we prepare the tax return. I'll see that while preparing the work papers, I'll show you the impact of it. Okay, but don't have to stress out on state returns. It's very easy, guys. Once you understand the federal return, software will automatically calculate everything for state return. Just the thing which you need to apply your mind will be regarding the adjustments. Now, as we have seen, there are some adjustments in M1 and M2. I have not yet taken. Just remember, in M1 we have certain adjustments, right? That book to profit we have to match. Same way, the rules for federal are different. Rules for state are different. So there are some adjustments which will be made in the state return. For California state, I will take the adjustments and I will make you explain what are the examples of adjustments that can be made. Okay, but that is on very later stage we'll do it. First, we'll focus only on federal level, because this is the main important thing which we are going to understand. So simply remember, when you are filing the return at federal level, you will have to mandatorily use any of these 4 forms. Okay, at state level, you have a respective state returns which you can use. Now, what do you mean by LLC? LLC is limited liability company. Okay, this formation, right, will be done at a state level. Means, let's say I am staying in California, I want to incorporate my business. And guys, remember, staying in India also, you can incorporate your business over there. In any particular state, you can incorporate your organization. That kind of incorporation will be at a LLC level, limited liability company, which you can develop over there. For that, you have to file a article of organization. See, there is a difference between article of organization and article of incorporation. You are not incorporating any business. You are just registering your organization over there. That's why article of organization will be filed. But in case of a C corporation or S corporation, you will file article of incorporation. At this stage, you are incorporating your business at a federal level. And it is mandatory, guys. See what will happen now. In case of LLC, your organization will be recognized only at state level. Means California knows that you are in existence in California, right? But what if at the end of the year you have to file the tax return? In tax return at federal level, you will have to either select 1065 or 1120S or 1120 or 1040. Any one of this you will have to select. Now, this selection will depend totally on the number of members, okay? Or there are two selections. One is default selection. Means if you don't select anything, right? What will be the default selection for this type of company, right? LLC. Default selection will be if there is only one member. Okay, this one member will be called as single member LLC, or can also be called as disregarded entity. For both of them, you will have to file a 1040 at a federal level. At state level, you will have to file the respective state form. Okay, so two returns usually, whenever you start preparing the return from that, whatever information you receive from the from your client, you are going to first identify. First and foremost thing you do is preliminary assessment. Check the previous year return, whether they have filed the state return or not. If not, then that's fine. Check the current year's gross receipts, whether they are earning the gross receipts from different states or not. Okay. If they are earning from different states, then you have to file a state return. Okay. So remember one thing, if you're just a one member, the default election will be single member LLC or a disregarded entity, which is nothing but your Schedule C, a business income on your 1040 form. Okay. What if there are two or more members? Two or more members, then the default election will be partnership. So these are the two default election. Now you have to decide whether this default election, which is being made by the federal level, the IRS will by default categorize you as a partnership. See, when you apply for EIN number, what do you mean by EIN? Just like in India, we have PAN number, right? For each and every entity, we have PAN number or firm identification number, something CIN, company identification number is there. Same way, there is a employer identification number. Okay. So for running a business, you have to take a EIN. For taking a EIN, you will apply to IRS for EIN number. Now IRS will issue you a CP notice. CP notice is nothing but your, designating your EIN number. In that letter, it's a letter, I can say, in that letter, IRS letter, they will mention you have to file as a 1065, okay? Till what date you will have to file, that will be mentioned in that letter only. Okay, so it will be a default election. So first time when you file that EIN, at that time, it will show you a default allocation. Now it is your duty that if you want to, categorize yourself as a 1120 S corporation or a 1120, then you will have to file a two different forms. Like for S corporation, it is form 2553, and for 1120 C corporation, it's 8332. Okay, these are just a normal form for electing your entity as a different from default election. Okay, and if you're a single member LLC, right, you don't have to file any form. You just have to include all your income expense on your Schedule C 1040 directly. You don't have to file any of this election form. But remember, when you receive any documents, any returns, and if it's a first time filing, okay, when you if you guys are starting with your own practice or anything, you will receive a lot of returns which will have a first time file. Check for this 2553 form which the entity might have filed. Check for article of incorporation. Check for article of formation, right? corporation or formation, check for the CP notice which you receive, indicating the employer identification number. Okay. Once you receive all this data, you are ready to prepare your first time filing return in case of corporation. Okay, guys. Any question on this? Just mention in chat box if you have any question on LLC, because I know LLC a little bit tricky to understand. But if you guys understood the concept of federal and state, you will easily understand it. At federal level, we'll file the all the forms which you are going to understand in 1065, 1120S, and 1120. At state level, you are going to file respective state forms. Okay. Now remember, there are 7 states which are exempt. Exempt states means in those states you don't have to file a separate tax return. Okay, so I'll just send a list of those 7 states in the group, but just for example, there are Texas, Florida. Okay, these are the 2 examples of the states where if your business is running in Texas or maybe Florida, you have to just file a federal return. You don't have to file a separate state return. So this 7 states are the exempt state where you are not going to file a state return. Okay, so I'll just check the chat box. Any question on LLC? Please brief it again. Okay. Anyone else who didn't got the LLC? This topic. LLC is simply a limited liability company which is recognized only at state level. Okay, so for recognizing that at a federal level, you have to either go for 1065, 1120S, or 1120. If you want to file as a corporation, you will have to file a form 8332, and in case of S corporation 2553, you will have to file. Okay, so what will happen in this 2 case? What is the deadline of filing this form? Before the tax return due date, means 15th of April or maybe 15th of March, you will have to file these 2 election forms. Okay, so this are we are going to provide you this material. It's written over here in detail: sole proprietor, corporation, S corporation. We have partnership. In that we saw limited liability partnership and general partnership. Then we have seen about LLC, that is limited liability companies. Then there is a single member LLC. This is nothing but it is called as disregarded entity. Unless they elect to be taxed as a corporation, they can go for S corporation or C corporation. Okay, and all those income will go on Schedule C of the 1040. Okay, now here you can see one more topic is entity classification election. The checkbox regulation means wherever you are going to elect your entity, either as a C corporation or S corporation, you have to select that thing on your first year filing. Okay, so 8832 and 2553, these are the 2 forms which you are going to file depending on what type of classification you are using. I used 83. Okay, it's 8832, guys, not 8332. Okay, so these are the 2 forms which you have to elect when first year when you're filing the tax return. Wait, let me show you that thing on the form. See here, you can see A option. The A box number A is mentioning as S election effective date. Means let's say you have incorporated on 1st of January, but you have applied to be elected as a S corp on say 15th of March or let's say 6th of June. After the due date of filing, after the due date has been passed away, after that if you are filing the S election date, then you will be mentioning here the actual date from which your S election is effective. Got it, guys? This is simple. If you see, if I just walk through the 1120 S corporation form, The first checkbox, the box number A, was regarding S election date. Second, B option is your business activity code. What kind of business you are going to carry out. For that, IRS has issued a whole list of business activity codes. In software, we will see there will be a drop down. Okay, for each and every business activity, there will be a drop down. In that, you have to just select the type of business. Let's say it's a manufacturing units or a service provider or a chemical industry or a computer and service. Whatever is the type of activity, it will be whole listed in the software. But for your information, like, you can just visit to IRS site and check that there are a lot of business activity code mentioned over there. I'll also share that in the PDF. I'll share the PDF for this code to you guys in the Telegram group. Okay. Then we have the basic information, the name and the address of that particular entity. D option, what you can see, the D box is mentioning as employer identification number. Just like in India, we have company identification number, PAN card number, we have employer identification number over there. Then we have to mention the date of incorporation. See, for S corporation and C corp, you are going to file article of incorporation. If you guys remember, in case of only state level, you have article of organization. But at a federal level, if you have to get recognized at federal level as a S corp or C corp or a partnership, in partnership there is a partnership agreement. But for S corp and C corp, you'll have to file a incorporation agreement. So here the date of incorporation will be mentioned. Here, from which date you elected to treat it as a S corporation will be mentioned. Many a times this too will be exactly the same date, but in many cases it might happen that you are incorporated, but later on, you elected to be selected as a S corporation. So the effective date of S election will be mentioned on the box A. Box E will be your incorporation date. Then you have to mention on the F column, you'll have to mention the total asset. What is the reason of mentioning this total asset? Let me explain you. You guys, if remember M1 and schedule L. M2 and M3, see M1 and M3 are both substitutes. Either you can use M1 or M3. M3 is used by a high net worth clients, or I can say who are having a very huge gross receipts and value of assets are very higher. We'll see the limit right now. But right now I'm taking just the M1 into explanation. Remember one thing, if your assets and the gross receipts are less than 250,000. Okay, I am saying assets plus gross receipt means your asset should also be less than 250 and your gross receipt should also be less than 250. Not plus, I can say and. Your asset should also be less and gross assets should also be less. If this criteria is fulfilled, you don't have to file schedule L, M1 and M2. Got it, guys? Simple. That's why on the first page only, the total asset needs to be mentioned. What are your total asset during the whole year for which you're filing the tax return? Okay. Same way for, this is for S corporation and C corporation. Same way for partnership, the limit is 250,000, right? In case of receipts, but for asset, the limit is 1 million. Okay. If it is up to this limit, you don't have to file your schedule L, M1 and M2. Got it? We'll understand each and every detail. See, the main thing in M1 and M2, which we are going to understand, is the temporary and permanent difference. There are a list of items which we will understand, which needs to be added, which needs to be reduced. Once you got this thing properly, you understood this thing properly now, it will be very easy for you guys to reconcile M1 and M2. Reconciling is the most difficult part for everyone in corporate taxation. And they used to waste a lot of time in reconciling it. But once we start with preparing the work paper, at that time only we'll reconcile the M2. What is M2 now? I'll explain that. M2 is your reconciliation of retained earnings. See, simply understand the logic. What happens now? In books, there are certain incomes that are exempt. In books, there are certain expenses that are, non-deductible. Okay, we'll understand this. Also, there are certain incomes which are taxable but not included in books, or there are some expense which are deductible but not included in books. Due to this, what will happen? Your tax profit will change, right? Okay, got this point. Tax profit will change. Now, how this will be affected on your return? See, if we look at the M1 and M2, see, this is your book profit and this is your income or loss, which will be your tax profit. Okay, you'll start from here, you will add certain items, you'll reduce certain items. Okay, and then you'll come to a figure that is your as per the tax profit. Now this thing will go to your M2. How it will go? See, balance at the beginning of the year means your opening retained earnings. Okay, you are going to add your ordinary income that is directly from your page 1. Means I can say this amount will get directly added over here. Then there will be other additions which are made over here and here will again be added over here. There will be any loss. See, instead of income, if there is a loss, it will be shown on line 4 over here. There will be any reductions also, right? Along with additions, there are some reduction over here. So it will be shown over here as a reduction. So here you will get a net of all the additions and reductions. Okay. Then you are going to reduce some distributions. Distributions means I can say withdrawings, which maybe partner is taking, or maybe the members are taking, or maybe the distributions which are personal nature of expenses which are being shown in the profit and loss. Okay, those you have to again do a tax grouping. We'll understand that, okay, properly. Just remember that M2 is nothing but your partner's capital account, which in Indian taxation we see, take the opening capital, add the income share of the current year. So here whole 100% share of income will be added, right? Schedule K1 items which are included over here, right? That thing will also be added. See, here it is mentioned other additions and other reduction. What does that mean? That is nothing but whatever incomes and whatever expense are shown on your schedule K will be shown over here. Okay, or second way of remembering is whatever is your income, first you take this, here is your additions and deletions, you will include over here. Just remember like this also, that is also fine. Okay, so now what will happen? This ending balance you will receive, this is your closing retained earnings. All right, now this closing retained earning will become opening in the next year, but this is your tax calculation, right? In books opening retained earning might be different, closing retained earning might be different. So the first step in corporate taxation which you are going to do is matching your opening retained earnings and closing retained earnings. Okay, so when we are going to prepare the work papers, let's see, maybe tomorrow if we are going to take, or maybe in the next session, because I think almost the whole overview of 1120s form I will be completing today only. We'll see how much time will be permitted tomorrow. So first thing, when we see the preparation of work papers, we will match our opening retained earnings with our closing retained earnings. What will happen? There will be few items which are not included in books, or which are included in extra amount in the books. We will have to adjust them. So for them, we will pass a first adjusting general entry will be always for matching our retained earnings. Got it, guys? So we were at we're understanding this thing now, M1 and M3. Yeah. So just remember this. If your gross receipts are up to 2,50,000, you don't have to reconcile any book income, any tax income. You don't have to even prepare the balance sheet in the tax return. Means only page 1, 2, 3 will be used. That is your page 1 is just the profit and loss. Page 2 is the informations regarding the shareholders and members. I'll just walk through the page 2 right now. Page 1 is your profit and loss. Page 3 is your schedule K. Page 2 is just the basic information. So only this 3 page will be used if your gross receipts and assets are less than 250. Now remember, when you receive from your client the data, all the data and information to file your tax return, what will happen? You have to first check the gross receipt. If it is less than 250, you don't have to apply your mind in reconciling all these things. It will be unnecessary effort to do this. Okay. Second thing, you will check that whether the taxpayer is having first year filing, then whether they have received the this letter of incorporation, letter of formation, article of organization, incorporation, EIN number. Okay. For that, you will receive a letter from the IRS that you'll have to check. Okay. Based on that, all the basic information you have to enter, and then all the income and expense detail, whichever is provided by the client, you are going to enter it on your page 1. That's it. Okay. Now let's see what is Schedule L. Before moving to Schedule L, I just want to know that do you guys have any question till now? See, M1 and M2, don't stress out. We are going to learn it in a very detail. Our corporation, training is based, around this M1 and M2 only. Because this is the main thing which people face issue. Apart from this, if you guys have any question, just write it in the chat box quickly. Yes, at state level, taxes are paid. Federal level also taxes are paid. At both level, we have different tax rates which need to be paid. Yes, for filing the return, EIN letter, article of organization, everything you have to check, because as a tax preparer, if you're using your PT number, right, you will be responsible if you don't check the EIN and everything. Yes, gross receipt limit of 250K is applied on the gross receipt and asset individually. Let's say your gross receipts are 3 lakh, but your asset are only $1 lakh. So any one of them is going above the limit of 250,000, you will have to file the M1 and M2 and Schedule L. Okay. Yes, Poonam, I'll go a little bit slow. No worries. All right. I think for today's session, we will be providing the day 1 recording. We will be providing because many of them have joined a little bit late, or they might have missed few concepts. So for today's record, for only day 1, we will be providing you the recordings. Okay. And anyways, it's a whole overview concept, theoretical concept, which you can, refer later on, even after the completion of the batch. You can just refer this concept again and again. This is just a basic overview of all the 3 returns. Okay. Now remember one thing, this 6-month extension, which I told now, in that case, at state level and at federal level, if you're filing the return, both the return needs to be extended. Federal level extension is free. You don't have to pay any cost at that time. But when you're extending the state returns, there is a fixed amount which is charged by the state to extend your return. I can only say that for California, it is $800. Okay. Same way for different states, there are different, this amount which needs to be paid along with your state extension. But you don't have to worry when you file actual, extended return. This prepayment you will get as a deduction, right, from your taxes. And if it is paid in excess, let's say your tax amount is just $500. So if you have paid excess, that is 800, so $300 you will get a refund. But it is mandatory when you extend your state return, there is some prepayment at that time of taxes. In California, it's a fixed filing fees, fixed extension fees of $800. Federal extension is free of cost. You don't have to pay any extra amount. But remember one thing, you should have paid estimated taxes, right, before you extend your return. What is estimated taxes on each quarter? Quarter 1, quarter 2, 3, and 4. So currently, if you guys receive any return to prepare in maybe in October season, those return will be for tax year 2022. Okay, so during 2022, just like in India we have advanced tax, there we call it as a estimated taxes. So estimated taxes should be paid in the 2022 tax year only. If you don't pay, right, then there will be a penalty that will be automatically generated by the software. You don't have to worry about calculating the penalties and everything. But just remember, when you're extending the return on 15th April or maybe 15th March, whenever you're extending the return, at least 90% of your tax liability is already paid, right, in the form of estimated taxes. Got it? This we'll understand it later on. Once we prepare the whole return, we'll see how the calculation is done for taxes. Later on in the maybe after preparing the whole return, we will see that. But just remember, when extending the return, this was the fees which you have to don't have to remember or mark up, because there are almost 50 states in US. Each state will have a different extension fees. Out of that, 7 states are exempt state, right? Rest all 43 states, there is a different fees for extending the tax return. So don't have to remember it, but you can refer it, maybe a chart or something. I'll share that thing also. Extension filing fees, one thing I have to share, and second is business activity code. That PDF I will share. Okay, this 2 things. So this was just the basic overview of the types of entity. Now let's see about the different forms. 1120S, the basic overview we have seen. Let me take the schedule B. Let's understand it properly. See, first page, you are going to include just all income and expense related to your business. Okay, this all are called as your tax groupings, which we will understand when we prepare the work papers. Once you enter all your incomes, all your expenses, right, you will receive a net income. This is your 100% business income, which will go to your schedule K. Okay, now it might happen that during the whole year you might have paid some taxes, right? So you are going to take, see here it is there, estimated taxes if you have paid, or maybe in previous year you have paid some taxes which you didn't take the refund. They have 2 options. Either you can take the refund or you can apply that overpayment into next tax year. So either you might have paid extra estimated taxes, or in previous year you have a refund which you can take a credit over here. Okay, then see tax deposited with 7004. This is nothing but your that California $800 fees which you have paid. It will be mentioned over here. Okay, then we have certain credits. We'll see that general business credit. General business credits. Just like in India, we have some deductions and credits, right? Here, we will be seeing that in business also, we have certain credits which will be allowed on your tax return. Means from your total tax, you can reduce this much amount. Okay. So credit for on fuels, federal tax paid on fuels. This will be one of the credit we'll understand later on. But just remember all the taxes which and credits which are allowed will be mentioned over here. If there is any amount owed, will showed on box number 25, right? Or if there is any overpayment, means either you can take a refund of it or you can apply it for the next year. Okay, so this is the first and easiest page, I can say. Simply your profit and loss. You have to take your profit and loss from the book. And remember one thing, this is your book P&L. This is not yet adjusted with any entries. Take your book profit as it is, book incomes, book expense as it is, and put all the data on the page. Whatever adjustments will be made on this book profit will be done on your schedule M1. Okay, here all the adjustments will be done. Don't adjust it right now when you enter it on the page 1. Okay, next page is okay, so the remaining one is the simple basic details. Whoever is the officer, main officer of the organization of the S corporation, that person will be signing here as a signing officer. The date will be mentioned, the title over there can be a CEO, it can be president. The basic, like the common title, I can say general common title which they use is president over there. Okay, then we have paid preparer use. Means if you are preparing the return, you will write your name, your signature, date, and firm name if you have a EFIN. See, if you don't have a EFIN, you are going to elect here as a self-employed and mention your PT. See, any one of you guys can take a PT number. All right. It is very easy to apply for PT. Once you get a PT, you can easily file the tax returns for any one of them, but you can file only through paper file. If you want to e-file the return, you have to take ERO number. And ERO number can only be taken by any person who is having SSN. SSN is a social security number. Those who may be a citizen or a resident over there have a social security number, right? Just like here we have Aadhaar number, over there it's a social security number. Those who have a SSN number, those they can apply for ERO. SSN plus you will have to take a CPA license or maybe EA license. Okay, so EA license number will be used or CPA license number will be used, plus your social security number will be used. After that, you can e-file the return from the software. But no need to worry, in India, sitting in India also, you can easily file the tax return for your clients of which you are going to receive the documents and everything for preparing the return. So don't worry about that. But this is just for your information that this section is nothing but regarding the preparer sign and the officer sign. Now let's see this thing. This is very simple. Schedule B is regarding some basic information of your organization. First thing is what accounting method you're using. It can be a cash or accrual, or it can be a hybrid method. Okay, so cash and accrual method, we are all aware about it. As and when we receive the cash, right, we are going to record it in our books. So this is our cash accounting. Accrual accounting is what? As and when the activities performed, or maybe let's say I am a service provider and I book my accounts on accrual basis. So as and when my activities are performed, I'll book it. And same way in case of expense, as and when it is accrued, expenses are accrued, I will record it. Okay. In case of hybrid method, you can use cash and cash or accrual and accrual. Means what? Some transactions, if you are some income, if you're recording it on cash basis, all the expense related to that income needs to be recorded on cash basis only. It might happen that some incomes you are recording on accrual basis, but the expenses for that income should also be recorded on accrual basis. Got it? That is a hybrid method, but most of them will use a cash method and accrual method when they are preparing this tax return. Now, one important, most important adjustments which you will see. Just a minute, guys. Okay. One important adjustment which you guys will see is, if what happens if your books are maintained on cash basis, but when you file the tax return, you want to file it on accrual basis, right? This case can happen, and this happens in a huge, big companies, big corporation who have a lot of gross receipts, right? In that case, what they will do, they will make some adjustments which are cash to accrual basis adjustment. Just like book to tax adjustment we have cash to accrual adjustments. And see, don't no need to worry, only the major adjustment will be in inventory, because inventory is one thing which get affected in case of US taxation. It get affected in case of you move from cash to accrual or accrual to cash. Also, some of the incomes will get affected, but your inventory will be the major chunk which will get affected. So that adjustments will be called as cash to accrual adjustment. Okay. Now, remember one thing. There's one more thing which I need to specify over here. Yeah. If your gross receipts are up to like less than $27 million, okay, then you can opt for either cash or accrual. That's fine. There's no mandation in that case. As soon as your gross receipts are more than $27 million, you will have to compulsorily prepare your tax return as per accrual basis. Okay. And remember, when you are preparing accrual basis, you will have to maintain your inventory. Okay. So in case of gross receipt, this limit keeps on changing each year. For 2022 it is 27. Till previous year it was 26 million. So just remember, you have to check the gross receipt criteria, whether to just provide a guidance to the client whether you need to file it on cash basis or accrual basis. Okay. Now, what can be the example of the adjustments in case of cash and accrual basis? What can be the adjustments which you can make in this two things? One thing is, let's say you have recorded all the sales which you have made on cash basis, but actually the items are lying at your at your go down, at your wholesale or trade or retail shop, right? The fulfillment is yet to be done. Then you cannot recognize till once it is sold or once it is delivered to the particular person. So there is a lot of calculation which needs to be done from converting from cash to accrual basis. But again, you don't have to worry about it. If you guys have heard about QuickBooks Online, or maybe QuickBooks Desktop, or maybe Sage accounting software, any XYZ accounting software, they have the option where you can generate profit and loss balance sheet as per cash basis and as per accrual basis. Okay. While accounting only, it's a duty of accountant to segregate the things properly when they are accounting all the items. Once you decide to file the return on accrual basis, just generate all the reports three reports we usually need. Okay, before starting the tax return, what thing you need to ask to the client? Please provide profit and loss, and that has to be comparative. Previous year and current year comparative P&L you have to provide. Okay. Second thing you have to ask is balance sheet. Third thing you have to ask is general ledger. Okay, general ledger is nothing but a detailed transaction of each and every entries which you have made. We'll see the general ledger also when we prepare the return. Why we use this? Because we, in case if we have to scrutinize any particular ledger, let's say distributions are on a very higher side, or let's say rent expense are on very higher side, you can just go to the general ledger. Open general ledger is an accumulation of all the ledgers. Okay, all your category of income, expense, liabilities, asset, each and every transaction will be in detail. Okay, so just take the general ledger as well for verification of your incomes and expense. If in case you have a doubt, you can just verify it with the GL. Fourth and important thing which you need is the previous year tax return. If it's a first year filing, then that's fine. But previously, if the return is already filed, just take a previous year tax return, because it is important to compare the return first when you start the tax return and check what all deductions were there in previous year, what all credits were there. Okay, everything. So these are the four important things which we will require. Based on this, we will prepare our work paper in an Excel sheet. In that work paper, we will be adjusting our P&L, adjusting our balance sheet, and matching our opening retained earnings. Okay, so don't worry about cash and accrual basis. Simply it will be available from your accounting software. The type of report will easily be extracted from that. Okay, so what is the next thing? Second is business activity. You'll have to mention your business activity, whether it's a consulting service, it's a manufacturing unit, or any wholesaler, trader. Whatever business activity you are into, you have to just mention it. Product or service, whether you are selling a product or a service, either you can enter here as a product or as a service. Okay, now wherever there is this white lines, there you have to mention a checkbox, yes or no. This is just a checklist kind of thing which the IRS will ask you depending on your whole year's activity. Okay, so the third one, it is saying at any time during the tax year, whether there were any shareholder or a corporation which were a disregarded entity, a trust or estate, or a nominee. Okay, means this we are looking at the 1120 S corporation. In S corporation, you have to just mention during the whole year whether the members was any shareholder of a corporation, a disregarded entity, a member of a trust or estate, or a nominee of a similar person. Then you will have to select here as yes. Once you select here as yes, you'll have to attach a B1, that is schedule B1, showing the information of that particular corporation. Like the name of the corporation will be there, the name of the shareholder will be there, right? Each and every details will be mentioned on schedule B1. Got it, guys? This are the basic checklist question which you can see over here. Next, fourth one is regarding the stock ownership and regarding the interest in profit. Okay, so as I mentioned, anytime if your member is a non-resident, is a foreign corporation, right, then that 1120 S corporation will have to terminate its S election. Got it? So what will happen if a person is owning directly 20% or more, or owning directly or indirectly 50% of more of total stock, right? Issued and outstanding of any foreign or domestic corporation. Let's say I am a member of this 1120S corporation. I am also holding a stock in a foreign corporation, okay, holding more than 20% or maybe 50% directly or indirectly. Indirectly means maybe your family members is holding those stock in the foreign corporation. See, 1120 S Corp rules are very strict. Okay, even if you make a single mistake or if any single criteria is breached, your S Corp election will be get terminated. And in the year in which it gets terminated, that year also you'll have to file the return by selecting this S election termination. Even on the last year also, when it is getting terminated, you have to elect it like this. Okay, so you have to mention the name of the corporation, the employer identification of this corporation, okay, the country in which it is incorporated, percentage, how much percentage that person is owning in that as a stock in that corporation. You have to mention that, okay. And in percentage, in the fourth number, if it is 100, you will have to enter the date of a qualified subchapter as subsidiary election. Means what? See, you have to understand this thing properly. Whenever there is a S corporation, okay, in this S corporation, let's say some other entity is owning 100% of share. So can I say this will be called as subsidiary and this will be called as holding. So this is saying that thing only. If a person, okay, is holding 100% in any other entity, then it will be called as qualified subchapter as subsidiary election. Okay, and you have to mention the date in that case. Got it, guys? This, see, basically in all the in the practical life we have filed so many return. In all the thing, it's always no, 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 and no. But it doesn't mean you have to just copy and paste the previous year data. Just check, read each and every line, analyze it, whether the condition are breached in the current year or not. Okay. Second, B option is simply saying that if you own directly or indirectly any interest, okay, in the profit or capital in foreign domestic partnership. See, this is about the stock in foreign corporation. This is about the profit or maybe interest in the foreign partnership. Okay, if this happens, you will have to mention the name of entity, same the EIN number of this entity, what is the type of entity, whether it's a 1065 or it's 1120, okay, what is the country and maximum percentage which you are owning. Let's say you own 25% or 50% percentage you have to mention. Okay, next one is 5th A. At the end of the year, did the corporation have any outstanding shares of restricted stock? What do you mean by restricted stock? If you have bought some stock, there is a restriction of, let's say, 5 years or maybe 2 years, that before this 5 years and 2 years, you cannot sell that particular stock. Okay. During the tax year, you have to check that corporation, this 1120S corporation, are having any outstanding shares of restricted stock or not. If yes, if the answer is yes, in this column over here, in the inner column, you have to mention what are the total shares that are restricted, what are the total shares that are non-restricted. Okay. If at the end, same way, the 5th A and B, this point are related to stock and shares and stock options, outstanding shares, everything. Okay, so this is first one is regarding restricted and non-restricted. Second one, what it is saying is whether the corporation have any outstanding stock options, warrants, or any similar instruments. Okay, means still the public has not taken, they have the right to take the option. Option means what? They have the right to either purchase it or either give up the right. Okay, so if they have given up the given the option to all the shareholders or members, but they have not yet turned up, right? So total number of those kind of stock, total share of stock outstanding at the end you have to mention, and total share of stock if all instruments were executed. See, you have issued the stock option and they have purchased the shares. So all executed number of shares you will enter. If they have not been executed, you will enter the outstanding shares over here. Okay, next one is if a corporation filed or is required to file 8980, that is what? Material advisor disclosure statement to provide information on any reportable transaction. This is regarding your foreign transactions. If your entity has entered into any foreign transactions, then there are some criterias which are mentioned for filing form 8918, that those transaction needs to be reported. So if you entered in the reportable transactions, you will have to file form 8918, which is called as material advisor disclosure statement. Okay, next one is if in case the corporation has issued any debt instrument which are publicly traded. So corporation if issued publicly debt instrument with original issue discount. What do you mean by OID? Means let's say the face value of a particular share is $10, but I am issuing it at $8. So can I say there is at the time of original issue, the first time when I'm issuing this share securities in the market, first time I am issuing it at a discount of $2. So along with original issue discount, if you're issuing any instrument or publicly traded, if your shares are publicly traded, you have to just do this checkbox like this. Okay, and once you check this box, you have to file the form 8281, information return for publicly offered OID. It's simply look at this form 8281. It's simply the in much number of shares, okay, and this much number of discounted share you have issued, the number of shares you will provide, the face value, the discount which you have provided, all those information will be mentioned on this 8281 form. Okay, you don't have to remember the form numbers, but we have our like IRS site has a whole new I can say a wholly different chart available over there. I just shared the link in the group where you can just search any XYZ form or any name of a particular thing for which you can search which form needs to be filed. Okay, and trust me guys, in US there are a lot of form numbers as compared to India. In US there are so many legalities, so many forms, but those are very easy to understand. They are lengthy but easy to understand. Okay, so don't have to worry about how you'll remember the form numbers. There is IRS site on which there is a wholly different search box available over there, so you can just enter anything and find any of the form numbers from there. Okay, from from 7th we have done. 8th number is regarding if a corporation was a C corporation. Okay, so let's say initially it was C corporation and now they want to elect it as a S corporation. Okay, so what will happen? See, this is one important concept I'll explain. When it was a C corporation, at that time there will be so many assets bought at that time. Now when it is getting transferred to S corporation, all this asset will be transferred to S corporation. Okay, now out of this asset, one of the asset is sold. Okay, so what will happen? the date when the C corporation is getting transferred to S corporation, let's say it's 1st of June, for example. So on 1st of June, whatever is the FMV and whatever is the cost, right? The difference between this two is your built-in gain. Okay. So if in the current year, let's say the asset which you are selling has been there in the C corporation, was coming from the C corporation to S corporation, so this built-in gain you will have to treat in a different manner. Okay, and this built-in gain will go to your schedule K, guys. So not on your page 1. This built-in gain will go to your schedule K. So what this 8 point is saying, that if a corporation was a C corporation, right, when it was elected to be S corporation, or if a corporation acquired an asset with a basis determined by reference to the basis of the asset, right, on the hands, and net unrealized, see what it is saying, net unrealized built-in gain is in excess of net recognized built-in gain from prior years, then we are going to enter here unrealized built-in gain. What this unrealized built-in gain, see, when you're transferring the asset, this built-in gain is not recognized anywhere at all. When you're selling the asset, right, you will have a selling price, you will reduce the cost. So whatever is your net income, net gain, I can say, this you will bifurcate into two things, that is unrealized and realized. Unrealized built-in gain is a part of this, the difference between FMV and the cost when you're transferring that asset. And realized means actually what you have realized right now. So remaining will be your realized gain. Okay, it might happen that there will be a loss, right? Selling price minus cost, that can be a loss also. So no need to identify this unrealized and realized, simply it will be a loss on sales of business property. Okay, but if there is a net gain, you have to bifurcate this gain into unrealized built-in gain and realized built-in gain. And this will come only in the picture when the C corporation is getting transferred to S corporation. Same way, if some other C corporation is getting transferred to partnership. Always remember the logic why we are doing this is, when it's a C corporation, all the taxes will be paid by the C corporation. When it's a S corporation or when it's a 1065 partnership, all the taxes will get transferred to the K1, right? That's why it is necessary to answer this point number 8, right? If there is any unrealized gain, built-in gain, then you have to mention it over here. Okay, but if there is no sales, no transfer, nothing, you don't have to answer this question at all. Don't have to mention anything. See, wherever there is a gray area, there is yes or no answer, you don't have to put in that. Wherever it's blank area, you have to answer yes or no. The 9th and important one is, if you are electing as 163J election for a real property, trade or business, or a farming business in effect during the tax year, then you have to select yes. What does this means? This 163J will understand maybe tomorrow. For this is a little bit conceptual topic, will understand that it will take time to understand. So the 9th point, this section 163J, and it is important one, will understand that thing tomorrow. Okay, then 10th number is, there are a bunch of question on 10th. Is the entity satisfying any of these 3 things or not? First is, corporation owns a pass-through entity with current or prior carry over excess business interest expense. What does this means? Whenever you are a S corporation, right, means you are a pass-through entity. But if you are having a excess business interest, this 163J is related to business interest only. And let me explain you like this, that interest income are, let's say, $100. Interest expense are, let's say, $120. So what IRS has a law that interest expense will be allowed only up to the amount of your interest income. So the excess disallowed $20 will be carried forward to the next year. So this is what A point is saying. If a corporation owns a pass-through entity with current or prior carryovers, okay, maybe current year we are carrying it over, or maybe prior year this amount is coming in current year, then the amount of excess business interest, then you have to select here as yes. If any of the following, either if this condition is fulfilled, second is fulfilled, or maybe third, here the 10th checkbox you have to elect as yes. Okay. Next one is, see here now that gross receipt test question is there, whether the corporation is having a aggregate average annual gross receipt for the last 3 tax year and current year of more than 27 million or not. And along with that, if a corporation has a business interest expense. So again, this will come in our 163J criteria. We'll see that. Remember this 27 million, how it is calculated, taking the 3 years average, including current year. So let's say we are filing a tax return for 2022 tax year. So we'll take 22 gross receipt, 21 and 2020. Take a average of all three, like divided by 3, and check whether it is more than 27 million or not. Okay. The third one is, corporation is a tax shelter and a corporation has a business interest expense. Okay. So again, point 9 and 10 will take again in a detail when we see this section 163J. It's totally related to the interest expense limitation. Okay. If the C point is yes, then you'll have to file a form 8990, that is limitation on the business interest expense under 163G. Okay. Next one is, if a corporation satisfy both these items. So this is that regarding whether we need to file Schedule L, M1, M2 or not. So what is the criteria? Whether the total corporation's receipts are less than 250, or whether the assets are less than 250, and if yes, corporation is not required to complete L and M1. Okay. So in this case, if it is less than, then you have to tick here as yes, or if it is more than, then you will elect here as a no. As soon as in software we will see, as soon as you select here is as yes now, your schedule L, M1 and M2 will not be shown on your output screen. Okay. What is your input and output screen? That will see this form is your output form, guys. This is your output form. Input is something where we enter each and every details in the tax software. Based on that, the software will generate this whole output form, which will be e-filed to the IRS. Okay. So as soon as you select here as a yes, when you see the output form, you will not see, you'll see that this all thing will be blank. This will be blank, your M1, M2 will be blank at that time. Okay. So schedule B, line 11 up to line 11 we have done. Other information, again, we have some more information regarding it. 12th number is, during the tax year, did the corporation have any non-shareholder debt that was cancelled or forgiven? Okay, means let's say you have provided some loan to other than the shareholder. This is regarding providing the loan, not taking the debt. But if you're providing the debt to other person, and if that is cancelled or forgiven, is that's a benefit for you, you'll just elect here as yes. Okay. And if you once you elect here as yes, you will have to enter how much benefit, how much principal reduction was done. Okay, let's say outstanding amount was 55,000, but out of that 5,000 was a part of your interest. So 50,000 is your principal reduction, which is forgiven. Okay. Next is, during the tax year, was a qualified subchapter S subsidiary terminated or revoked? Here, if you enter into a S subchapter subsidiary, 100% holding is there, then you will enter over here. The revocation of this subchapter subsidiary is there, then you will enter it over here as yes. If it's not there, you'll just enter as no. Okay. Then, did the corporation made any payment that were required to issue 1099? Now, what do you mean by 1099? In India, if you guys remember, there is a TDS, right? Whenever you are paying a certain amount to maybe to vendors or maybe to the contractors, to professionals, there is some deduction of tax which is made at source, right? Same way, over there they call it as a form 1099 MISC and NEC. Okay, just a minute, guys. I'll just show you 1099 MISC and NEC. I'll send you the criteria that in which what are the criteria. Just remember, whenever you pay anyone more than $600 by way of rent or by way of any XYZ expense to the vendors, then you will have to issue them 1099 form. Okay, and that has to be issued till 31st of Jan after the end of each year. Okay, so once you see that you have issued some of the 1099 forms, then you will select as yes, and if you are not required to issue, you will select as no. Okay, the next question is just asking that only, if you're selected as yes, whether you have actually filed the forms or not. All right, last one is last 15 point is, if the corporation attaching form 8996 to certify as a qualified opportunity fund or not. Okay, this point also will take along with this 10th point, that is 163, and one more point was left, I think. Just a minute. Okay, I'll see. This point also, the 15th point, we'll see later on. Okay, right now you don't have to stress out on this all points. Just today, it's your duty to go through. Today, I will be sharing all the materials, all the reading materials. Just go through the basic details. From tomorrow, we will be understanding the C corporation. Like this is the total S corporation form we have understood. Tomorrow, we will be understanding the C corporation, and we will understand the permanent and temporary differences in your M1 and how to reconcile your opening retained earnings, that is MT. See, the crux is this only in corporate. Once we understand how things are figured out in reconciling this thing, it will be very easy, and you guys will enjoy performing the mocks. If you don't understand how to reconcile it and directly we jump on mocks, you guys will get frustrated that I'm not getting anything. Okay, I'm not understanding anything. So let's tomorrow first understand the permanent and temporary difference. Okay, and how to reconcile this opening retained earnings. Okay, schedule C, schedule K is very simple. When we start with the work paper preparation, there I'll show you how you are going to do the tax grouping, which is mentioned over here. Okay, so income, deductions, credits, international transactions will be there for them. The K2 and K3 will be used. Okay, then there will be a alternate minimum tax and items. There are some items which will be affecting the basis, means this is nothing but your distributions. Okay, we'll understand that along with the work paper. First and foremost thing today which you guys are going to do is understand each and every line of your page 1, 2, 3, 4, right, and 5. And I will be providing the theoretical material which is prepared over here. This, just go through this theory, right? Make your own notes, make the filing, like what are the filing deadlines and everything, because this is how you guys are going to remember even after the lectures. The first and second lecture is important. After that, when we prepare the return, you are going to anyways understand, easily able to catch up the terminologies and everything, because we have already seen basic terms in our first and second session. Okay, so along with that, I'll also share you one more material which will be having this M1 and M2, the temporary difference topic in that, so that tomorrow when you come to the session, just go through that thing once, and then we can easily understand that. Okay guys, so let me know if you guys in the chat box, just let me know if you guys have any question. Kokila, form 1065 is the partnership form, just like 1120 S corporation. It's a 1065 form. Tomorrow I'll give you the overview, just like today we did the 1120 S corp whole overview. We will provide you the overview of 1065 tomorrow again. Okay, we'll have access to recording throughout the batch. Only today's session recording we are going to provide, guys, because today like there was some people who joined late, or some people were having a connectivity issue. They were logging in, logging out. So that's why only for today's session we are going to provide the recordings. Okay, make sure to attain daily live batch only. If in case you're missing any of these lectures due to any emergency reason or anything, you can just email to Manushi and me. Okay, after if the reason is valid, we'll provide you recording for that particular session. Okay guys, so let me know in the chat box if the speed, I know the speed was a little bit fast today, but I'll try to improve it from tomorrow's session. Any other suggestion from you guys in teaching technique, or any suggestions, advice? Since it's a first session, we can improve it from the upcoming session, so please let me know. Okay. Okay, great. So, all right. Today's session will send you on the email all the material. This recorded session. Please refer it, go through it, and tomorrow again we will be meeting at same time, 8 a.m. in the morning. Okay, don't miss out. We'll wait for 5 minutes extra. Please join on time tomorrow, right? So that you guys don't miss anything. And tomorrow's is very important session. M1, M2 reconciliation, permanent temporary difference. We will see practically how we are going to do it. Okay. Thank you guys. Thank you so much for your time. We'll meet tomorrow. Have a good day.
Thank you.